Over the past few months, there's been a lot of fear, uncertainty, and doubt surrounding Tesla stock. People on all types of social media platforms are selling Tesla stock, and bearish coverage on Tesla has garnered substantial attention lately. On the flip side, many say that Tesla stock will reach monstrous highs without much calculation behind those kinds of price targets. On both sides of the debate, there's a lot of misinformation, with the majority of the misinformation coming from the bearish side. For example, this video, which has blown up recently and has over 2.4 million views, claims that Tesla obtains lithium from young children overseas in order to criticize Tesla's ethics.
It is also obvious to the young children working in your overseas lithium mines.
However, the truth was that picture shown in the article was from a cobalt mine in Congo that Tesla does not directly source cobalt from and indirectly obtains cobalt only from qualified refiners. In this video, I will cover the simple truth about the value of Tesla stock and dispel any myths about Tesla along the way. Full disclaimer, as many of you already know, I am a long-term Tesla shareholder, but I am extremely conservative with my numbers in comparison to other bulls, as you'll soon see. Welcome to Kazkin's Academy. If you're new to the channel, please consider subscribing for more content like this, and let's get right into it. Tesla has multiple revenue streams that are all in different sectors, so it's difficult to project and calculate the value of Tesla stock. However, by dissecting each revenue stream one by one, we can get a relatively accurate estimate on the future of Tesla. Over the past few weeks, there have been so many investors focusing on the short term, with reports coming in about Tesla's delivery numbers for certain months in China day after day. These types of concerns are not only unnecessary, but also detrimental for those who are interested in looking at the bigger picture. In fact, when talking about how some investors were underwhelmed by Tesla's battery day, Elon Musk said, "Sell your stock, I don't care." Lately, many investors have also been capitulating, which manifests how those investors did not do enough research prior to investing in Tesla stock and other assets that they sold. This image perfectly demonstrates how in the short term, the market acts on how the majority perceives a stock. If almost all speculators are greedy, then the price may be peaking in the short term. On the contrary, if almost all speculators are fearful, then the stock price will likely go up in the short term. For the following calculation, I'll be projecting a bull, base, and bear case scenario, mainly because there are many uncertainties in the stock market and the economy at large. There are three main revenue drivers for Tesla: automobile deliveries, energy, and potentially insurance. Note that there are other sources of revenue for Tesla, such as regulatory credits and trading cryptocurrencies. On a side note, there's been a lot of misinformation surrounding regulatory credits, where some are saying that Tesla's profit comes from the government. The majority of regulatory credit revenue does not come from the government. It comes from other automakers that pay Tesla in order to help them meet carbon emission requirements. Nevertheless, I left regulatory credits out of the following calculations because those are one-time payments that will likely decrease in the future. This spreadsheet shows the bull case scenario for Tesla, where Tesla hits its goal to deliver 1 million vehicles in 2021, which was leaked in a meeting with Tesla's workers. After that, I projected vehicle delivery growth of 60% in 2022, 50% from 2023 to 2025, and 35% growth in 2026. The first catalysts for these deliveries include GigaShanghai's production ramp-up, the opening of GigaBerlin and GigaTexas, along with the ramp-up of the Cybertruck, Semi, and Roadster. Following that, potential catalysts include the opening of Giga India, a $25,000 Tesla, and further ramp up with all vehicles in Tesla's lineup. Next, I projected Tesla's average selling price per vehicle over the years, which decreased as cheaper vehicles like the $25,000 Tesla were unveiled. Using these two numbers, I calculated Tesla's total vehicle revenue over the coming years. Then, I projected Tesla's insurance and energy revenue, with insurance only accounting for 3.4% of vehicle revenue and energy at 6.5% of vehicle revenue. Finally, I projected Tesla's gross and profit margin to account for Tesla increasing the price of FSD as it develops in the economies of scale. Ultimately, I chose a gross margin of 41% and a profit margin of 19%. To put this into context, Ford recently reported a profit margin of 9% in March of 2021, and Ford spends billions on advertising, does not have autopilot, which is a high margin service, and also pays massive fees to dealerships. Using all of these numbers, I calculated Tesla's total revenue and projected an estimate for Tesla's price to earnings and price to sales ratio going forward. I used a price to earnings ratio of 35 by 2026 and a price to sales ratio of 10. With these two numbers in handy, I calculated Tesla's valuation based on these ratios. For the 2026 valuations, I estimated Tesla's valuation to be at $2,215.14 based on earnings and $3,331.04 based on sales. Subsequently, I took the average of these two valuations to obtain an estimated 2026 valuation for Tesla stock of $2,773.09 in the bull case. From Tesla's current stock price, this implies over 31% growth in Tesla stock every year in the next 5.5 years. In the base case, I used more conservative numbers, such as 950,000 deliveries for 2021 and deliveries slowing all the way down to 35% year-over-year growth in 2026, despite the release of the $25,000 Tesla. The next two rows represent roughly the same calculations, and the row under that represents Tesla's insurance revenue, which I estimated to be 2.5% of Tesla's vehicle revenue. Afterward, I assumed that Tesla's energy department would slow down to 18% year-over-year growth from 60% year-over-year growth in 2021. When it comes to earnings, I used a 2026 gross margin of 36% and a profit margin of 18%. Using the revenue numbers from before, I calculated the total revenue and then used the 2026 P/E ratio of 30 and a P/S ratio of 8 for the last valuation portion. Using the same method as before, I ended with the valuation for Tesla stock of $1,491.70, which is an average growth rate of over 17% year-over-year in Tesla stock price over the next 5.5 years. In the bear case, I used much more conservative growth numbers for vehicle deliveries, which mainly range from 25 to 30% growth rates. Next, I projected a higher average selling price per vehicle due to a slower release of the $25,000 Tesla and the potential for less full self-driving growth in the bear case. After that, I estimated Tesla's insurance revenue in 2026 at 2.5% of vehicle revenue. Then, I assumed that Tesla's energy department would have its growth slow down from 40% to 15% per year. Lastly, I projected a gross margin of 33% and a profit margin of 15% for Tesla in 2026. Finally, using a P/E ratio of 30 by 2026 and a P/S ratio of 7, I calculated an estimated valuation for Tesla stock of $890.55 by 2026. If this bear case occurs as projected, Tesla's stock price would still grow 7.33% year-over-year in the next 5 years, which is honestly not too bad, especially in the bear case. However, we're still not done yet, as in the final valuation model, I estimated that there was a 25% of the bull case happening, a 50% chance of the base case happening, and a 25% chance of the bear case happening. Using these numbers, I calculated an estimated stock price for Tesla stock of $1,661.76 by 2026. At this valuation, the compounded annual growth rate for Tesla stock price would be over 20% year-over-year, which is pretty incredible. Overall, I believe I used quite reasonable numbers, as they did not even include the potential for Tesla's ride-sharing network, restaurants, which by the way can be explained in the top right corner, in HVAC, and all of the other sectors that Tesla can enter, like licensing out battery technology. On a side note, I believe it's quite ridiculous that some claim that Tesla's regulatory credits make up the majority of Tesla's earnings, when regulatory credits only represented 5% of Tesla's total revenue in 2020. Not only that, but Tesla cannot obtain regulatory credits without manufacturing vehicles, so it's not some kind of free revenue source. Clearly, Tesla's primary business is its vehicle business right now, but it also sandbags the potential for accelerating growth in the energy sector. In conclusion, despite all of the fear, uncertainty, and doubt surrounding Tesla, it seems like Tesla stock is actually valued relatively low at the moment, given the upcoming growth rates for Tesla. This growth ahead is extremely clear, as Tesla is only continuing to develop its full self-driving platform, expand its Gigafactory network, ramp up the production of existing vehicles, and release and manufacture a $25,000 Tesla. Let me know what you think about my valuation model down below. By the way, the spreadsheet I showed in this video is available for all patrons. If you're interested in seeing my valuation spreadsheets, my brand new $25,000 portfolio, which I have a goal of growing to $100,000, my main portfolio, buy and sell alerts, and more, check out my Patreon in the first link down below. If you enjoyed this video, please hit the like button and subscribe, and I'll see you in the next one.